The invisible wall and the illusion of diversification. What if I told you that the true safety net for the financial elite in the United States and Canada is not a secret hedge fund, but a jurisdiction just a 3-hour flight from Miami? While your traditional financial advisor insists you diversify your portfolio by buying 50 different index funds, they are deliberately ignoring the most basic rule of wealth survival. It is completely useless to have your capital split across 100 different stocks if every single cent you own is trapped under one single tax jurisdiction and an increasingly volatile political ecosystem. Building your entire financial legacy within a single border today is exactly what France did when they built the massive Maginot Line before World War II. They built an impenetrable multi-billion-dollar wall facing Germany and felt completely secure at the time. And what happened? The enemy simply walked right around it. Wall Street sells you a financial Maginot Line. They convince you that standard market diversification is enough to protect you. But the real threats today are not just stock market crashes. They are the silent erosion of your purchasing power and the relentless fiscal appetite of governments operating with massive deficits. Look at what the Pearson Institute for International Economics just published early this 2026. The risk of higher US inflation in 2026 is real. This is not a simple temporary market stumble. Institutional analysts are projecting a structural reality where the purchasing power of the US dollar continues to bleed out from the inside. When inflation becomes endemic, keeping all your assets in high-taxed, highly regulated domestic environment is a losing game. The smart money knows this, and this is exactly why they are executing a quiet, highly strategic wealth migration. But where exactly is this money flowing? The immediate guess for many would be pointing towards European golden visas or Asian financial hubs. However, the reality is much more practical and sits right in our time zone. The silent exodus points directly to the dollarized economy of Panama. Pay close attention to the recent report by Investment Migration Insider. The rise of the invisible wall. Why the strongest passport is no longer enough. The rules of global mobility have drastically changed. High net worth investors have realized that a first world passport, once viewed as an absolute shield, can easily become a fiscal cage. Algorithmic border systems and aggressive tax nets are closing in. You need an escape hatch and an international plan B with a legal framework that actually respects your capital. The Iron Belt of the Americas. Panama is not a cheap destination for expats to retire and drink margaritas on a tight budget. That is a tourist brochure from 20 years ago. Today, Panama operates as the corporate and wealth belt of the Americas. Why Panama? Because elite capital does not migrate for tropical weather or the beaches. It migrates seeking absolute legal certainty. Panama operates under a strict territorial tax system, which is directly protected by its national constitution. In practical terms, this means that the income you generate outside Panamanian borders is simply not taxed by Panama. If you're a tech company, a real estate portfolio, or you have your real estate portfolio, or your consulting firm that operates in the United States or Canada, and you decide to position your assets in Panama, your foreign-sourced income remains completely untouched. This is not a direct legal loophole or a temporary accounting trick. It is a fundamental pillar of the Panamanian Commercial Code, deliberately designed decades ago to attract and shield global wealth. Now, compare this with the rest of the Latin American countries. In countries like Colombia or Argentina, capital constantly fights against severe currency devaluations and hostile political shifts. Panama completely neutralizes this risk by using the United States dollar as its legal tender. You get the hard stability of the dollar, but you free yourself from the aggressive tax burden of North America. But this capital is not buying random apartments in the middle of the city traffic. They are taking positions within highly controlled and institutionalized ecosystems. Let's analyze the case of Panama Pacifico. We are talking about a former U.S. military base that was transformed into a massive, privately managed special economic zone. It is a corporate and logistic hub that houses over 3,000 companies, including global giants like 3M, Dell Technologies, and Maersk. According to the Ministry of Commerce, there are between 185 and 190 multinational companies operating under the exclusive SEM regime for multinational headquarters, plus those joining under the EMMA manufacturing incentives. When you buy a property in developments like Parterre or Sanctuary within Panama Pacifico, you're not buying simple square meters. You're buying access to the highest income and most secure demographic in the entire region. You're positioning your asset to rent it to multinational executives whose housing allowances are paid directly by corporate headquarters abroad. And for ultra-high net worth individuals, the capital flow goes towards architectural marvels like Ocean Reefs Islands. Developed by Grupo Los Pueblos, these are private man-made islands built directly in the Pacific Ocean, offering a lifestyle that rivals the most exclusive neighborhoods in Miami or Dubai, but anchored firmly within Panama's privacy and fiscal protection frameworks. Promoter risk and the shielding strategy. Reaching this point as an analytical investor, you are surely asking yourself, this all sounds too perfect, but is it really that safe to invest in a foreign country? What happens if the construction company runs out of funds? What if the building is never finished and my capital gets trapped in an endless legal battle thousands of miles away from home? Those are exactly the questions you should be asking, and they are what separate true strategists from common investors. Promoter risk is the single biggest threat to your international plan B. It is incredibly easy to destroy your wealth in a foreign market if you buy based on a beautiful digital design presented by a company with no financial muscle. Too many foreigners arrive in Central America and hand over millions of dollars to developers with no proven track record, only to watch their investments vanish into thin air. The strategy to counter this is not to be paralyzed by fear or do nothing. The strategy is to execute an intelligent wealth migration by aligning yourself solely and exclusively with institutional powerhouses. The structure capital refugees by working only with developers that have an absolute bulletproof track record. We are talking about corporations like Grupo Los Pueblos, Empresas Vern. These are institutions with over 40 years of uninterrupted history shaping the country's skyline, and they manage the properties long after they have handed over the keys. When you anchor your capital to this level of corporate integration, you effectively eliminate execution risk. Your investment stops being a game or a gamble and becomes a tangible, high-yielding asset specifically designed to beat inflation and secure your family's future. Stop living your life's work exposed to the whims of a single government and a single tax authority. You have the power to design your own jurisdictional optionality. My focus is creating tailored strategies to position your wealth within these highly protected Panamanian ecosystems. Visit my website, rogelionunesrealty.com, and schedule a private strategic session with me. Together, we will build your international plan B and play the map in your favor. I see you on the right side of the map.